We're getting towards the end of the year, so taxes are something that you need to think about. The stock market and crypto has been hit pretty hard, and as a result, we can actually use some of our losses to our advantage. We give enough of our money to the IRS already when it comes to stuff we pay at the end of the year, when it comes to stock market investments or stuff that's automatically deducted out of our paychecks every week. So the way that we're going to try to benefit from this is by selling stocks at a loss. We're not going to do this on purpose. I made a video, which I'll link above right now, talking about what I did when I tried to time the market unsuccessfully and how I'm going to turn that into my advantage. With crypto as a whole being down pretty bad in the past year, I'll put up some of the major cryptocurrencies up there like Bitcoin, Ethereum, that type of stuff. You'll see that they're down between like 60 and 80% so far in the past year. And we can take advantage of that to a higher extent than what you can do with actual stocks and ETFs. Last week I talked about tax loss harvesting when it comes to stocks and the benefits behind that. But when you look at crypto, there are some loopholes that are legal in the IRS tax code that I don't believe are going to be around for much longer, but as of right now we can use them to our advantage. So let's talk about tax loss harvesting with cryptocurrency. Stocks and ETFs are considered securities. They are taxed in a different way based off of the IRS tax code. And when you look at the wash sale rule, which is something that I'll talk about in a future video, it talks about buying and selling the nearly identical security within 30 days of each other. Security is a very important word because the IRS taxes things differently. When you look at cryptocurrency, the way that it's taxed currently based off of the tax code is it's taxed as property. Property does not equal security. Who would have thought? What this means is that it's going to be taxed in a different way than stocks and investments like that. But we're able to benefit from it without having to worry about the wash sale rule that is something that a lot of people have to deal with, and I'm going to make a video in the next week or so talking about how to avoid it, and if you do get into a wash sale, how to fix that. So be on the lookout for that. But this benefit of having crypto as a property and not a security wasn't really made apparent to me until the stock market and the cryptocurrencies have fallen in the past year. So with the situation we're in right now, something that you can actually do and something that I'm about to take advantage of is selling cryptocurrencies at a loss and buying it right back. When it comes to a security, a stock or an ETF, the wash sale rule means that you're not able to buy that ETF or stock or an identical security within 30 days or the loss is not going to be able to be applied. This does not count with cryptocurrency. You can buy it, sell it, and then buy it back at the same price. But you might look at that and you go, why would you want to do that? Losses are something that's not as exciting to talk about when it comes to investing. Everyone talks about how to limit your tax bill when things are going well, but you can actually benefit from the current tax code with losses as well. And so we're going to take advantage of that. Taxes are one of the ways that you can offset either capital gains or just ordinary income. So the way that it's set up right now is that capital losses are able to offset capital gains. So if you have a $1,000 gain on a stock and a $1,000 loss on a cryptocurrency, they offset. Another way you can do it is if you don't have capital gains to offset, you can offset up to $3,000 of ordinary income per year, pretty much indefinitely. So if you have a $30,000 loss, you can offset $3,000 worth of ordinary income every year for 10 years until it runs out. And so because of this, because stocks and cryptocurrencies are at 1-year lows, we're going to be able to sell these at a loss and be able to benefit from them in the short term. You may look at this situation and go, wouldn't that just change your cost basis and lower it and your tax bill is going to be higher later? Yes, but we're actually going to be okay with that, and I'm going to explain why with math. I hate when people say, oh yeah, we're actually going to benefit from this, but they don't explain why, so I'm going to use a hypothetical situation with some of the numbers that I'm running with right now. My current cost basis for Bitcoin is $20,000. It's currently sitting around 16.6, but I'm just going to round it up to 17, so it's a nice even number. That $3,000 is the upper limit of amount of ordinary income that you can offset, so that's why I picked that number. So if I sold it right now, that would be a $3,000 loss. And this is around a 15% drop, which is where I'm sitting at right now. Some of the things that you do need to consider is that depending on where your crypto is stored, you may have some transaction fees. The major exchanges that I found are around a 1% fee. I have my stuff sitting on Robinhood, which I know is not the safest, and I'll make a video talking about that in the upcoming weeks. But one of the benefits is that there's no transaction fee, so I don't have to worry about that. But if you have a relatively small loss, be sure that loss is going to not be offset by the fees that you're going to pay to the exchanges. So be sure to double check on that. So in this situation, I have a tax loss of $3,000. Let's say I don't have any capital gains to offset. I'm just going to use it to offset ordinary income. I make around $45,000 a year. So when you use that to offset the amount of income, I live in Oregon, that's going to result in a tax gain or a refund of $750 based off of the current tax rates that federal and state have. So that 25% that I'm going to get back, that $750, is going to be reinvested back into Bitcoin. This situation doesn't work as well if you just take the money out of the market, because by the time you pay taxes on it later, you're not going to get that gain from it. But now I have $750 extra going back into Bitcoin, and assuming it goes back up to my break-even point previously of 20,000, let's see how the difference in gains are going to result. So by that time the price of Bitcoin goes from 17,000 up to 20,000, that $750 has transformed into $833. Assuming that I've held it for longer than a year, considering I'm holding Bitcoin for the long run, I'm going to be taxed at the capital gains rate, which means that my federal tax bracket is going to be 0. Then you look at the Oregon income tax, which is 9.9%, which means I'm going to have a tax bill around $350. So as a result of this process where I'm selling at a loss, reinvesting it, I was able to take the $750 refund, have that increase in value up to $833, and as a result of the taxes I'll pay, which are $310, not the $350 I mentioned, which means I'm going to result in a profit of $572. Taxes aren't fun to think about. You never want to think about losses, which is why a lot of investors during the bear market have been pretty quiet about how their portfolio is actually doing. I think it's really important to talk about the winners and the losers and talk about things that can be done even in bad situations like this. Tax loss harvesting is something that rich people do frequently because they're paying professionals to do it. I'd highly recommend talking to a tax professional to make sure this is something that you can do and is beneficial to you. And as always, this is not financial advice. This is just a situation where I'm currently holding Bitcoin at a loss, and I'm going to be able to use it to offset ordinary income that I'm going to have in this year, get it back in my tax return, and invest it back into Bitcoin. And by the time it makes it back up to its previous break-even point, I'm going to have gained because of the tax implications associated with it. So let me know if you've ever used this, the distinction of cryptocurrency as a property versus a security, to your benefit, and let me know if it's something you're considering doing as the overall crypto market is down significantly in 2022. Thanks for watching this video. Let me know what topic you'd like me to discuss in a future video, and I will see you next time.